joining. Must have been a bit of a hiccup joining in, but yeah, it's all good, all sorted now. So, welcome everyone. Thank you. Thanks for your time. Really appreciate it. We have got a couple of investors already here. Let's just wait for a couple of minutes so that we can give some space to all the investors who have registered for this webinar so that they can join it. So, in the meantime, to keep it a bit fun and interesting, if you can just drop in the comments, the message section, where exactly are you joining this webinar from? That would be good to know. And also, yes, also if you have stayed in an Airbnb before, and one thing that Gary and I were discussing, also going down the memory lane, if you recall, how much did you end up paying? So we have Saurabh here from Sydney. Hi, Saurabh. Gagandeep from Melbourne. Ankit from Hobart. Thank you guys. Thanks for joining. Uh, South from Adelaide. Helene from Melbourne. We have all of Australia here in the room. Good to know. So let's just wait another 3 minutes and then we'll kickstart with our value proposition. And again, Saurabh, Ankit, Harleen, now that you've commented here, do you you remember last time you stayed in an Airbnb and how much did you end up paying for your stay?
you know and also, if I could add, how was your experience?
Gagandeep here stayed in an Airbnb and paid $2,000 for 4 nights. Nice. How was your experience, Gagandeep? Was it worth $2,000? Good, good. We've got Iswarya Buthukumar from Tasmania. Welcome, Iswarya. I hope I said it the right way. So, Haleen, it's been quite a while. You're in a group of six, paid 3,000 for 2 nights. Must have been a really good property, Saurabh. And Harleen, yes, I stayed in Airbnb and paid $4,000 for 5 nights in Tasmania for a group of six. The experience was fabulous. Tasmania is fabulous, no doubt about it, Harleen. And how was your experience? Was it worth $4,000, Harleen? Yes, thanks for commenting, Adi or Addy. Uh, yes, we will be diving deeper into how does the operation from an investment point of view with the lens of Airbnb looks like, and we can certainly jump on a call later and we can strategize how we can collaborate. Running my business Airbnb right now with my investment property. Good, Aditi. How's your experience? Good. Perfect. Perfect. I think we have got a couple of investors already joined in. So let's kickstart this one. So first, again, thanks for joining. Really appreciate it. And talking about why we are here today doing this webinar, just look at the tagline like property investment strategy leveraging Airbnb, which is cash flow and capital growth, both like best of both the worlds without compromising anything. So, most of the investors here in Australia invest with an option like either or. They focus on capital growth or the cash flow. But here with our strategy, buying the right property, leveraging platforms like Airbnb and Booking.com, we are not in a position of doing either or. We are doing both, which is cash flow and capital growth together, leveraging right investment purchase and short-term rental platforms like Airbnb and Booking.com. So the combination is rare, and there is not a lot of professionals out there who can guarantee or who can portray a strategy in a way which deliver both cash flow and capital growth. Whereas with this, we buy residential houses and provide commercial returns, leveraging platforms like Airbnb. So this is what it is. We'll dive deeper into how we do it, what exactly it looks like, in a lot more detail during our webinar. Gary, you want to change the slide, please? Yeah. So setting an agenda and a game plan for coming 15 minutes, the whole intention here is to give you a perspective. Like it's not just a real estate business anymore. It's not just a real estate investment anymore. You're buying a piece of a hospitality business. It's a completely different sport, different mindset required to get a better understanding and a better hold of the strategy, and how we find such short-term rental opportunities using data and software and on-ground experience. We'll dive deeper into a software called ADNA that we use to filter it out. And instead of qualifying the properties, we try and disqualify the properties using that. And we'll dive deeper into in a lot more detail. And three strategies here at Jasper Advocacy we have to where we basically uh, help investors to achieve what they're trying to achieve. Whether we talk about renovation, development, we'll get into a lot more detail. And we get into three real life case studies, real numbers, real outcomes, and the lessons and the overall learning and the opportunities, underlying opportunities aligned with it. And the risk and mitigations around our strategies, like what are the risks and how we mitigate them. And at the end, we'll have a live question and answer 10-minute round where we'll try and answer each and every questions that you have. So can we move to yes? Quick recap. So this is our second webinar. In the first one, we covered why Airbnb, why short-term rental, why Tasmania, and we collaborated with our finance partner and also guide around how to structure your finances accordingly. This the tonight's session is all about how we identify such properties, how do we do our due diligence, how does the process look like from start to end, and how does the back end and the whole journey look like from an investor lens and from our business providing service lens. So, uh, Gary, you wanna just yeah. No, we Gary and I we post a lot of content around Airbnb, and we talk about Airbnb all day, every day in, day out, and we just talk about how underestimated this is as an investment strategy. And why we do that, just to give you a bit of a context, we both are Airbnb hosts first, then investors, then investment strategists. We've been hosting properties on Airbnb for good 4 years now. We have seen the industry from other side of the table. So hosting properties on Airbnb give you just like small tweaks, which creates big impact on guest reviews and ultimately returns. So that's the core competency that we bring in, and that's why we are a bit obsessed around it. So now we look everything from an Airbnb lens, and what we learned in our hosting career, we bring that value to the table and add significant value to our investors. So our approach is basically taking all the emotions aside out of the equation, purely look at the data and on ground intel, and take the decisions around property investment strategically and accordingly, to put it that way. We are buying mainly across Tasmania, few pockets of Tasmania and few pockets of regional Victoria, where data for both capital appreciation and uh, Airbnb cash flow aligns and ticks boxes really well. What data? We'll get deeper into this in next few slides. And again, our edge, our core competency is hosting on Airbnb, and that's the value that we bring to the table. So again, talking about the mindset shift, as I said, like Airbnb is not just a real estate business anymore. You are buying a piece of your own hospitality business. So think business, not just a tenancy. So the cash flow here through Airbnb is created, not assumed. So what I mean to say that is the reason we have significantly higher returns on rental yield. The whole fundamental philosophy is how you optimize the calendar throughout the year and how you maximize the hot dates of the year. So, to put it in a nutshell, in a 12-month average, 3 4 months are okay, 3 4 months are good, and 3 4 months are really good. So, you're as a host, as a business, as an entrepreneur, our job is to optimize the calendar throughout the year and maximize on the hot dates of the year to achieve what we're trying to achieve, that is good 10 to 12% rental return without compromising on the capital growth. The upside is real because you are not signing a 12-month lease, you are running it, optimizing and capitalizing on the hot dates. So there are like events where you can charge like 2x, 3x, or maybe 4x of your average daily rate. That's where you increase your bottom line revenue and overall experience. Uh, Gary? I think something's wrong with. Yep, must have been a glitch. Yep, perfect. Sorry about that. So yeah, our job basically here is to identify such properties and manage it professionally on Airbnb and other platforms like stays and booking.com. So again, if you want to switch to a next slide, Gary, that's the yes, short term versus long term, the real difference. Uh, where this short-term rental, you're getting revenue out of short-term rental sites, and long-term rental, you're getting rent out of the tenants who have signed a lease. So what the difference over here, the core difference here is you are basically there is a predictable weekly rent that you're getting. You know, qualify a tenant, and then you basically set and forget. There's a limited upside, and vacancy risk comes in like chunks. Like after one lease ends, there might be a couple of weeks where your property is vacant until you get your another tenant. Whereas, as we are talking about the mindset shift from a short-term rental lens, it's a hospitality business. You can maximize your revenue based on how you stage your property, how you position it, how you market it, and overall how the kind of guest you attract to your property. So that's the core difference between short term and long term rental. I'm gonna switch the slides again, Gary. So what we are targeting here, what we are trying to achieve, the best case scenario is good more than national average capital appreciation, which is double digit in first couple of years. The national average has been close to 7%. We're targeting more than national average capital appreciation and good 10 to 12% rental return, leveraging platforms like Airbnb and Booking.com. So we achieve, and we can only achieve that once we take three boxes, which is buying the right property at the right price. Second, setting it up right, like design, furniture, photography, positioning it. And third, which is the most crucial part, is managing it professionally, talking about pricing optimization, cleaning coordination, listing, problem solving, day to day operations, basically. So you need a professional team to manage it. So if you take three boxes, buying the right property in a good growth suburb, looking with some strong fundamentals, negotiate hard on the price, and look at the ADNA revenue proof, set it up right, position it well, like strategically renovate it or design it to increase its appeal on Airbnb marketplace and operate it professionally, we get this results. That is more than national average capital appreciation and 10 to 12% rental return. So we're talking about ADNA at the beginning. Like this is the tool that we use to identify properties, like whether it makes sense for us to move forward with the next layer of due diligence or no. And I mentioned like we'll dig a deeper into it in the next few slides. So let's talk about it. Talking about ADNA, it's more like core logic and RP data of short-term rental listings. So just like core logic and RP data, it gives you a valuation of your property based on what has been recently sold, like similar sort of properties sold in your area and similar sort of properties for sale in your area, right? Just like core logic, this ADNA is core logic of short-term rental listings. So it gives us the data of how much XYZ properties made on Airbnb and Booking.com last year. So when we run our check, like we are planning to buy this property, let's run it through ADNA. What we see is we see this similar sort of property made X amount of revenue last year on Airbnb. So based on that, you can have a realistic forecast. So quick underwriting rule of thumb from a Jasper advocacy lens is, let's just say we identified a property which looked good on paper, we run it through ADNA, and we see if this property is going to make us $70,000 on Airbnb based on live Airbnbs in the same area, we reverse engineer the price. Now we know this property is going to make $70,000 conservative average figure. We try and negotiate and buy it under $700,000. If we are able to do that, well and good, we move forward with our next layer of due diligence. If not, we give it a pass. So, looking at the next slide, this is what our end-to-end process where the ADNA fits kicks in. So, when we look at 100 properties, 10 of them looks good on the first glance, 5 of them tick a few boxes, and maybe 2 or 3 ticks all the boxes what we're trying to achieve. So long story short, to put it in a nutshell, when we look at 100 properties, only selected few, a couple of them, maybe 2 or 3 ticks all the boxes, and we are in a position to present it to our investor. Basically, we only present the properties to our investor which we would buy for ourselves. And to get that sort of a confidence, there is a rigorous filtration process that goes behind the scene. So yes, let's now take a real example of a real deal that we've done. Same with the ADNA concept that we had just explained. We bought this property, if you can zoom in a little bit, for $582,000. ADNA projected a revenue of close to $59,000. So we anticipated if we buy this property under $600,000, it's a good deal, it's a bargain. It's a good 912 meter square land block where there's an option to develop down the lane. But again, we looked at the real time pricing. So the Airbnb projected a revenue of close to $59,000. We reverse engineered the price and we thought if we are able to buy it under 600,000, well and good. If not, we'll give it a pass. We negotiated really hard after a lot of back and forth. We ended up buying it for 582. And on the first 2 months, 52 days to be precise, this property made close to $13,000 on Airbnb. So that's after all the expenses, that's 7.2% net rental return. So that's what we're trying to achieve. Now, again, cash flow is great. It's more like cherry on the cake. But our number one focus, our number one priority is capital growth. How we identify is we look at the data. From a capital appreciation lens, we're looking at vacancy rate, long-term rental yield, demand-supply ratio. To get a bit deep into this, lower the vacancy rate, higher the rental yield makes any suburb investor friendly, which drives growth. So we identify such markets where the vacancy rates are below 1%, which is a good signal for an investor. The long-term rental yield, let's take Airbnb aside for a sec. The long-term rental yield are close to 4.5, 5%, which makes it investor friendly. We look at any major infrastructure spend coming and identify such growths above from a capital appreciation lens. From an Airbnb lens, we look at average daily rate, occupancy rate, and revenue of comparable similar listings on Airbnb and Booking.com using tools like AirDNA. So this is how we identify. This is what goes from a filtration process of what we're trying to uh, get for our clients. From a capital growth, we're looking at growth above, at looking at such data factors. From an Airbnb lens, we are looking at factors like average daily rate, occupancy rate, and revenue of comparable listing. So we don't compromise on anything. We look for cash flow and capital growth both, not either or. We have three strategies at Jasper Advocacy that we implement to help investors achieve what we're trying to achieve. So, which is move-in ready cosmetic renovation and development. Gary, I'll introduce Gary, who is the head of research and my business partner at Jasper Advocacy, also our co-founder. Mike, over to you, Gary. Let's dig deeper into the strategies now.
Yeah, thank you. Let me know if you can hear me all right.
Yes, perfectly
Yeah,
fine.
perfect. So, no, thank you, Bhavesh, for setting this up. And so, Bhavesh has spoken about the fundamentals, what goes behind the research, what fundamentals we use, and how we execute a strategy. Now, I'm going to talk about actual strategy, and I'm going to share the actual case studies. So, we do three strategies at Jasper Advocacy. The first one is move-in ready, which is a turnkey service. The second one is cosmetic renovation, and the third one is the development. So, I'll talk it all the strategies one by one. I'll touch on the first one. The first strategy is move-in ready. What does that mean? So, for example, if you buy a property, okay, sorry, you can see my screen right here. So, if you buy a property in a suburb, where we don't have to do any renovation, it's good to go. It's in the right location. It comes through all the filters, all the checks and balances, and the due diligence we have. Then what we do is we make an offer, we source the property, we goes unconditional, we source the furniture, and from the day of the settlement, within 2 weeks, we go live on Airbnb. What does that include? That includes the furnishing and the styling, taking professional photos, putting it on all the platforms like Airbnb, Booking.com, stays, direct bookings, on Google Vacation Rentals. So listed on all the platforms that are available. And then a team in the background, which is a property management team, they do the pricing, they use dynamic pricing softwares, they liaise with the cleaners, they set up the guest messaging, AI messages, and then in 2 weeks' time, we go live and the property starts generating positive cash flow from day one. So that's the first strategy. And this works really well for SMSF client because there are complications around what you can do around SMSF. So this works really well where you don't have to do anything. You just have to invest $15,000 on the furnishing and you're good to go. And the case study for this one is, I'll again share the case study which Bhavesh did. So we bought this property for $582,000 in Surreal in Tasmania and Hobart. It's 10 kilometers from the airport. And we spent $15,000 on the furnishing. And the prediction was $59,900 in the first year from the ADNA. And in the first 52 days, this property made us $13,300 in the bookings. And what we're targeting in this one is 9% gross rental yield. And after all the operational expenses, it'll leave the investor with 6 to 7% net. The second one I'm going to talk about is the cosmetic renovation. This is my favorite one, and this is a really good one. This is where we manufacture equity and we lift the cash flow. So what does it mean, manufacturing equity? So we don't wait for the market to grow. We actually manufacture equity. So what we do is we buy a property in a good suburb, and we buy a dud property in a good suburb or on a good street. And then we invest 30 to 40 grand or 50 grand, depends on the scope of works. We renovate it strategically for the Airbnb appeal, for the Airbnb marketplace. We don't do any structural work. What we touch on is kitchen refresh, your painting, putting a new flooring, window furnishing, lighting, styling, and just tidying up the bathrooms and the landscaping. What it delivers for us is it delivers the higher nightly rate, which is it delivers a better occupancy and it deliver a good experience for the customers for the Airbnb. And in return, we build good reviews and it delivers good returns for our investors. So for an example, for an equity manufacturing, what does it mean? So, if you invest about $50,000 on the renovation, what it does is you can get in 3 months in the refinance around $120,000 valuation uplift of your house. And I'll share a case study to back this up. So if it's executed well, you're looking at about 2.5x uplift. So this works really well for an investor. So this is a dirty work. I want to be upfront about it. This is a boring work. This is not a flashy property. We're looking at that properties, but we're looking at properties which have good bones, and we are converting into a really good Airbnb appeal properties. So we look at this case study. So you can see before and after. So this was the before and after for kitchen and the bathroom. So what we did, we bought this property in a suburb on an eastern shore in Hobart. We bought it for $450,000. We invested about $65,000 on the renovation. And after 3 months, when I've invested in the refinancing, the same lender valued it at 625, which created about $140,000 equity. This is more than 100% cash on cash return. And the forecasted Airbnb revenue is $70,000. And we are looking at about 13.6 gross percent yield. And then for the investor, it'll be anything around 9 to 10%. It's set and forget. And they are in a position to buy the next investment or do whatever the cash they're getting out of that equity. This is really, really good strategy if it's executed well. For this, you have to have a good team. You have to have good education on the scope of works. What are you going to do? And if you plan it well, it works really well. The third one is the development potential. This is really good too, but this is a long-term strategy. So what we do is we strategically buy in a suburb with a good land size. So when I say with a good land size, anything between 700 to 1,000 square meter block. So, and the front of the house is positioned well, right? It shouldn't be in middle of the land. It should be either at the front or at the back. And we do all the due diligence, check the easements, the driveways, all the technicalities before making an offer. So we buy those houses and then put that house on an Airbnb to cover the holding expense and to generate that positive cash flow for the investors, and then put through the council for the subdivision or for the strata title multiple dwellings. So what it does is it gives an investors positive cash flow from day one, and they have a long-term upside with the development. And I'll share the case study for this one. So for example, this is a property we bought in around Hobart. We bought it for $815,000. The initial investment, the cash investment for the setup was around $20,000 because it was 4-bedroom house. And after running it on a Airbnb for 1 year, the investor realized the demand is really good. And then what we did, we converted the back of the unit, which was 42 square meter, into a 1-bedroom granny flat. So the investor invested about $80,000 capital into it for a granny flat because the structure was already there. And what it did, the first 6 months when we started running both the properties on Airbnb, it generated an annual projected revenue of $135,000. And when we did the valuation with the lender, the valuation of the house came up $995,000. So this is a strategy where we manufacture the equity for the investor and also the cash flow. So now this is a set and forget for them. And for example, this is how it looks. Excuse me. So this was the garage at the back, and this is how it looks on Airbnb right now. Risk. Let's talk about elephant in the room. So yes, we do have risks, but we're going to talk about how we're going to mitigate it. There is risk in everything because every strategy has it. The difference isn't whether risk exists. It's how you understood and how you mitigate or how it's managed upfront. So for example, seasonality and demand, we work on a 70% occupancy all year round. We use dynamic pricing to manage the pricing. When the demand is high, we charge, our pricing software picks up the demand. It charges around 400, 500. When it's off peak, to keep the occupancy close to 70% or 80%, it decreases the process. Council rules and short stay regulation. This is where you really need a team who knows what they are doing. So we screen local council settings early, and we avoid any gray area deals. So if it's not clean on compliance, we don't touch it. Overestimating revenue is where many strategies fall apart. So we don't overestimate that this property is going to make 100,000. So what we do is we look at the worst case scenario. We look at the ADNA comparables, and we look at this is the minimum this property will make. And with our property management team on ground, we are going to take it to if the property is going to make around $50,000 on an Airbnb, we're going to add another 10 to 15% with the strategies we have. Cost blowouts on renovation or furnishing, this can quickly kill returns. So what we do is before we source a property, we do a detailed report. Before we make an offer, we do a detailed scope of works. This is what the work's needed. This is how much it's going to cost. These are the quotes we've got from our trade partners. And this is how we give confidence to the investors. what it's going to look like once the property is sourced. So there are no surprises after that. Operational cleaning issues, poor reviews, or guest problems. This is where we work with our property management team on a day-to-day basis. We train them. They are proven managers. They have checklists. They use all the tools, AI tools that's available in the market. To make sure we deliver best possible services for our Airbnb guests, which comes in double fold for the investors. And finally, the capital growth risk. We don't only buy in one market, we buy in the growth pockets, where are multiple demand drivers. It's not only the tourism. We look at what the government investment is, whether there are schools, colleges, there are new subdivisions, is there a more land supply? So we look at all those levers from a capital growth perspective and make sure we buy in a suburb or in an area or in a state where we're going to see a double-digit capital growth in the next 2 to 3 years. So the goal isn't zero risk. Yes, the risks are there, but it's how you control what are intentional risks and what systems in place before the money even goes in. Nearly finishing, and then I'm excited to take the questions as well, because that's where we're going to clear up a lot of information. And what we do is, so you don't have to take our word. So what we do at Jasper is we create a detailed property report. This is how it looks. So once we shortlist a property, as Bhavish mentioned, out of 100, if you shortlist 2 or 3, we put it through a filtration. And when we think this is the property who makes sense for the investor, that's when we create a detailed report that's got a bank valuation, it's got a scope of works if it needs any renovation, how the numbers looking on AirDNA, and our high-level advice. So you don't trust us, you don't take our word, you just look at the data and you make a decision. Structuring your finances. Look, I'm not a financial advisor, but I'm just going to briefly touch on it. Again, please consult your brokers, accountants, but we buy for all the structures. Whether you're looking to buy in your individual name, whether you're looking to buy in a company trust, or whether you're looking to buy in an SMSF. So we work with all the structuring, whatever the structure is. It's fine with us. And how this works. So what we do is when we have a discovery call with the prospects, we shortlist them. If you believe we are in a position to help you, we bring you to the strategy session. So in the strategy session, we reset the brief. We recap your goals, what's your constraints are, what's your borrowing capacity looks like, what's your risks are. And then we choose the strategy. What strategy would fit you the best? And we work with you. And after that, we lock the buy box. We lock the location, property type, it's 3-bedroom, 4-bedroom, what's the maximum price, and what's the revenue we're looking at, and what are your risk limits. And then we pressure test the numbers, and then we align on next steps, and we go out in the market and start looking for you, start presenting you with the strategies, with the properties, which is going to work well for your portfolio. So if you want to help, you can book a discovery call with that team. That's 15 minutes call where we qualify whether we are in a position where we can assist you. Next is a strategy session, takes about 45 minutes where we go deep and share what we can do, how we can strategize your next investment for you. And the final is acquisition and launch. We source the property, we negotiate, we furnish it, and then we go live on Airbnb. So that's pretty much from us, from the presentation. Now we got good time. We finish. It's 7:35, so we got good 15-20 minutes. We can jump on questions. So what I'll do is I'll start touching on. I'll just scroll up. What was the first question? Can I please? So this is Adi. Can I please ask? Are we covering to manage properties via short stay Airbnb, including our own properties? Yes, of course. Yes, Adi. So look, what we are buyer's agent. What we do is we take your brief and then we go out to the market to source you the right property. So to converting an existing investment property to an Airbnb, this is not what is our bread and butter, but we won't shy away to give you a high level advice. So you're more than welcome to get in touch and we can assist you. Running my business Airbnb right now with my investment property. Perfect, Aditi. Looks like you're killing it. Last 2 months fully booked. Adi, again, thank you looking to know how to find or build team. We need to run it as in cleaner, grandees. you tradies, and it requires how to answer customer inquiry and access manage. Again, this is more of a property management question. I can go on, and being an Airbnb host myself for 3 years, I can go on and again. This is where you need professionals, right? You need to use all the AI systems that's available in the market. The dynamic pricing, the channel managers. Build a team. It takes time, but this is more into a property management side of the things. Do you advise only property investment or also discuss Airbnb arbitrage? That's a really good question. I'm glad someone asked for it. So there's a lot of confusion in the market between an investment and an arbitrage. So I just want to be very clear about it. So investment is something where you invest it for 5 years or 10 years, where you want your capital to grow for next 5 to 10 years. And what we are doing is we are solving the cash flow side of things. We're making sure your expenses are covered and the property leaves you net profit 2 to 3%. So for the sake of exercise, if you buy a 600,000 property, if your expenses are 40, let's say $35,000 to $40,000, our strategy is that property should make around $50,000. That'll leave you around that'll leave you around $10,000, which is 2 to 3%. And the arbitrage, it's a full-time business. It's a full-time job. And arbitrage is not that common in Australia because leasing a property for an Airbnb, it needs insurance, it needs approval from the owners. And if you don't do it at a scale of 20 properties or more than that, I don't think it's worth it. So yeah, look, we're not expert in arbitrage, but I'm not a fan of it. Sharing how long we've been in the business. Look, we've been doing this Jasper advocacy for 2 years, and me and Bhavesh been Airbnb host for 3 years. We've got our Airbnb investments in the similar strategies, and that's how we started this business. So we've been doing it for quite a few times. Docklands Airbnb market. Bhavesh, you want to touch on this?
Yes, sure. Yes, sure, Sahil. Can you hear me? Just to confirm. Okay, yeah. So talking about Docklands as an Airbnb strategy, Sahil, it's good, but depends on where exactly are you in your investment journey, because it's an apartment overall. There is no particular uh, detached house or dwellings or in Docklands subcode. It's all apartments or units out there. So units and apartments on on Airbnb are good for cash flow, but not at all good for capital appreciation. I mean, there are few projects, there are few deals that I have looked into for investors. Instead of property growing over the period of 10, 15 years time, it has decreased in value. So it's not positive capital appreciation, it's basically negative capital depreciation. So from an apartment on a Dockland side point of view, it's good for cash flow, but not for the capital growth. I hope I answered it. Yeah.
Yeah, no, good. Manoj, again, this is more of a property management question. How do you manage cleaners? It's like building a team. It takes time. Cleaners are really, really important for your business. It can make or break. So it's how you nurture them, how you reward them, and how you find them, and how you retain them. So it's more about people management. It's hard, but that's where you need professionals like us, because we don't manage one Airbnb. We manage multiple Airbnbs. So what our strategy is, we buy the property, so we look after your investment side of things, and we manage it for you as well. So for the management side, it's a revenue share model. So if your property makes $60,000, that's when we're going to make the money. Saurav, do you look for properties only in Victoria and Tasmania or any other states too? Really good question, Saurav. And I think I repeat this answer for our investors pretty much on a daily basis. So we don't stick to we don't stick to one market. We just take a shop where the growth is. So for right now, we see lots of growth in Tasmania and in regional Victoria, and also Hobart is the last capital city in Australia where you can get actually under $800,000. So from affordability point of view, and from the growth perspective and from the Airbnb lens, the numbers are stacking up really well. So let's say if we going to stick around in Tasmania for next 2 years, buying an investment properties for investors, they make money, we make something out of it, then we're going to shortlist the next market. I hope this answers your questions. But at this stage, to answer your question, we are mostly focused in regional Victoria and Tasmania.
Also, I'd like to add a point to what Gary just said, Saurabh, that we're looking at a market where we identified that this is a growth suburb and the property is going to grow. And then we just spend a lot of time and effort and energy into building a team. So, as I mentioned at the beginning, you need to tick three boxes to achieve what we're trying to achieve: buying the right property at the right price and managing it really well. So it's an operational efficiency game. So now we are actively buying there because the data is stacking up. We have done the groundwork for a couple of months to build a team around it. Now we are capitalizing on that. Eventually, we are very bullish and very positive about the few pockets of Tasmania and few pockets of regional Victoria where the numbers stack up. Eventually, again, as Gary said, in 1 or 2 years, 3 years time, we go and set up our shop where the growth is. So we are not emotionally attached to Tassie or Tasmania. We are emotionally and completely attached to the best return on investment.
Really nice. End-to-end process cost and funds needed except property-related cost. End-to-end process cost. Uh, this is something we can address one-on-one, sort of. Look, we, as I said previously, we are a buyer's agent, so we work for you. Like, you hire a real estate agent to sell your property. This is the same way you hire us to find you an investment property. So we will not only gonna buy you any XYZ property, we're gonna do the whole filtration process, which we discussed, or which we talked about, the data, the tools we use. So you pay for our time, like any industry buyer's advocacy fee. But happy to have a call tomorrow when it suits. Considering we have a shortage, this is good. Look, I'm glad, Arpit, you asked this question. I really want to touch on it. To answer this question, we bought a property for an investor in Preston, in Victoria. So that's in a suburb. And to answer this question, Arpit, we, in those properties, we host people who don't have a house. For example, if someone had a fire in their house, so insurance company books the house for like 2 months. If they had any plumbing issues, any emergencies. For example, there was a booking a few months ago. There's a construction going on Northeast Link, where there was a lot of noise during the night time due to the night works. So they placed those families with us. So yes, there are regulatory risks, but this is also an active income for the businesses. So Airbnb, I don't know the exact figure, but for Tasmanian market and for Victorian market, it generated a lot of income for the government from the tourism and from the Airbnb. Yeah, no, that's good. Yes, PPT Manoj, yep, you will get the recording of this email. So you're more than welcome to have a look, or you can reach out to our admin team, Kia. She can get back to you. Thank you, Kia. That's really good. Any other questions? We still have, we can still allocate another 5 minutes. I think the presentation is okay. We've shared our fundamentals. We've shared our trophy purchases, our strategies. But I think this is where we can handle a lot of objections or a lot of clarity, because this is what we do. This is what we live and breathe all day.
No more questions, I suppose.
Thank you, Manoj. Oh, really well, Manoj. Look, I have 3 properties under my portfolio with my wife, and my net cash flow is from those 3 properties, $240,000. And this is how we started the business. This is how exactly we got into business. So if this strategy works for me, why don't I just go and make a difference in investors' portfolio, so that they can carry on with the day job and I can take care of the investment. So they make, if they make $10, we make 2 out of it. It's a win-win.
And again, one thing that I'd like to add here, sort of like this seems to be a new strategy. I mean, like to an extent, yes, but those who know about it, those who have experienced it, they just don't go with any other strategy because it's like best of both the worlds. You're buying a residential asset and the growth aligned to it, and you're getting commercial returns. So just to add like my 2 cents over it, from a cash flow perspective, you only got a couple of strategies here in Australian real estate market. Whether you buy a commercial property or NDIS or co-living or rooming housing, which is very new for last 2 years now in the market, and then this is short-term rentals, which is platforms like Airbnb and Booking.com. So, in my opinion, this is one of the best. The risk are less, and pretty much like if you have a we have shot a lot of content around it as well, but if you look at the pros and cons, we've got your email, we can send it to you. Once you look at and list down the pros and cons associated with everything, and once you get a better understanding around what we are here to offer around Airbnb, uh, I'm confident that you it would be a no-brainer. I'm saying this with a lot of confidence and of course a lot of responsibility.
Yep. No, looks like Aditi, you're having fun. It looks like you're really happy with the strategy. So we are. So you're buying a residential asset where the growth is. You get more returns, capital growth wise, and you're getting a commercial returns. So we're solving both the problems with this strategy. That's another myth, Manoj. I think you don't have to have a property nearby you, because if you have a property nearby you, you're just buying another second job. You don't want to buy a second job. So you want to have people who professionally manage and run it for you, so that you can do what you're good at and you let them take care of your investment side of things. Uh, so yeah, so basically, yeah. So you need to buy again, keeping the emotions aside. You buy in a property where the growth is, where you're gonna get more than national average capital growth, and then also the returns on cash flow. Rock Bank, that's good. Good, Aditi. Would love to connect and brainstorm from your experience. Right, we'll give another 1 more minute before we wrap up for the night. Really interesting, and we will be doing this more often. The Q&A and the webinar, we're going to share as much information as we have, and if you can make any difference in people's lives with this strategy, we'll be happy. Um, 1 million in Airbnb versus 1 million. That's very subjective. Can you share comparison? I wish I could hear Arpit, but happy to have a phone call or a meeting.
Just on the top of my head, Arpit, the upfront capital that you require in commercial is significantly higher than an Airbnb because you're buying the residential asset. And the vacancy rates. So here, the upside on an Airbnb lens is way more higher because uh, you can actually manufacture returns based on how you position it. Whereas with commercial, the vacancy is like if it runs well, nothing better. But if there is slight hiccup that you don't want, the risk are yes, as a Gary summarized it really well. It's a high risk, high reward strategy. Whereas Airbnb's low upfront capital, similar sort of returns. Like on a commercial property, the best case scenario is you get 6% rental return. And here our conservative number is 6 to 8% net rental return. So you can do the maths. And happy to jump on a call and discuss everything in a lot more detail.
Yeah. And the growth and the capital growth on commercial, Arpit, is the increase on your rental. Let's say if the yearly increase on your commercial rental is about 3.1 or 3.2 CPI, then that's what your growth is. Whereas growth on the residential property is there's no upside. There's no limit. Sorry. So the last 30 years data is about 6.5, 6.7% on a national average. So we're looking at minimum, 7% on a capital growth, because that's still the key. All right, perfect. Look, we really enjoyed this session, and yes, thank you, Kia. So if you have any more questions, or if you would like to brainstorm, or if you are in the market, we would love to have a chat. And keep an eye on our socials. Havish does a lot of content. Keep an eye on our Instagram channels. Follow us. We'll be sharing our success and lots of information.
Thank you, everyone. Appreciate your time. Thank you.
All right. Thank
Happy
you,
to
Ritesh.
connect again. Cheers.